Hi, and welcome to Talking to Investors, the Impact Startup Negotiations podcast. Today, I'm speaking with Julia Bialetska, founder and CEO of S.lab, a sustainable packaging company. We discuss things like the top 3 reasons why investors were so eager to fund S.lab, the biggest waste of time when you're doing investor outreach, and what you should do instead, the secret to quickly assessing whether an investor is right for you or not, and how Julia got close to 100 warm intro B2B sales leads without the hard work of building connections and trust up corporate ladders until you finally get to a decision maker. As always, if you enjoy these interviews, please hit the bell button and subscribe to my channel. Now, let's go and welcome Julia. Hi, Julia.
Hi, Ben. Great to be here.
I'm going to jump right in with a serious achievement that you've had recently, which is you won the EIC Women's Prize in the category Leadership.
Yep.
Tell us a bit about that. That's exciting.
So EIC, or European Innovation Council, has created this award to celebrate women in innovation and women entrepreneurs as well. I think it's been on for more than 10 years, so for a decade. And as you mentioned, this year I became the winner of the Leadership Award. So really excited about that.
Yeah, and how does that work? Like for other startup founders, how do you enter this kind of competition for a prize? Do you get nominated, or how did it work for you?
So for this prize, there is a platform where all the EIC, I would say, grants and programs are listed, and you actually have to apply by yourself to this Women Innovation Prize. And I think this is also about confidence, to be confident in yourself, to actually apply to this program, not, to withhold and think that you're not worth it, but still, apply and then we'll see how it goes. Because, in my case, I got to win this award.
Congratulations again.
Thank you.
What do you think? What makes a great leader?
Well, great question. I don't think there is, like a very straightforward answer. It's a combination of so many things. And I would say that I have a couple of pillars where I built my leadership, I would say. So first of all, it is, I call it 100% responsibility. So I take 100% responsibility for everything that happens in my life, personally, business-wise, friendship-wise, everything. Because it all depends on me, and even if something happens bad in the environment, politically, economically, etc., I still can control my reaction to that and adjust my behavior based on this reaction. So if I don't react into something that it is a catastrophic event, but rather that I can find some opportunities there, or I can be like more positive still, so I can actually act differently. So this is, I think, the first, that I take 100% responsibility always. And then it would probably sound strange and not something that comes up when you ask about leadership, but I would say to be kind to other people, to yourself as well, but actually to take care of other people. Again, there has to be a balance. You don't have to sacrifice yourself in order to be kind. It has to be in balance, so you can be kind to other people. And of course, this kindness should be translated to the team that you built. And then, from that kindness, you should be looking into team members or people around you. What benefits do they have? What is their personality? What do they do better? And actually try to emphasize those benefits or those things that they do best, not to try to force them and, try to make them go out of their comfort zone, even though it is nice as well sometimes to go out of comfort zone, but doesn't mean that it has to be all the time and has to be stressful. So kind of, avoid stress at all costs, I would say. So yeah, I think probably those two main things, because of course there are many things that build on that, and it's just continuous process of improvement, of own improvement, and then also bringing this to the world.
Thank you. Yeah, and of course you're right. There's leadership is a very faceted thing, or multifaceted thing, and there's probably 153 skill sets that
exactly. Yeah.
But before we dive too deeply into that rabbit hole, right? Uh, why don't you tell us a bit about your startup? What do you
Yeah.
do, and what's your mission?
So in S.lab, we produce a natural replacement of polystyrene or foam plastic, and we do this with two plant-based components. I will show the material that we develop. So it does look like polystyrene or styrofoam, but again, we use only two plant-based components. One is agricultural waste, and the other one is mycelium. Mycelium, it is a network of mushroom roots, so we use its binding power to create a strong and reliable material. It has the same features as polystyrene in terms of waterproof, thermal insulation. It is also durable, but after the usage, it can be thrown into the soil and it will biodegrade in 30 days. So basically, we are on a mission to replace foam plastic and make it affordable and available to anyone.
That is so amazing. And I've heard about this kind of product that you're developing, and I heard that there are other kinds of benefits too. For example, that during the process of producing this packaging material, there's less CO2 emissions, right, than with polystyrene.
Exactly. Yeah.
There's less water used. And a lot of people don't know how, immense amount of water go into the production of these packaging materials.
Yep.
And so I've been very fascinated by this kind of product, and I'm very happy, obviously, to be talking to you today, where you're running S.lab. And where are you at right now in terms of, are you finding that there are great potential consumers or clients for your product? Are you generating revenue? What stage are you at right now?
So we do already generate revenue. Of course, we are not profitable at the moment, but we do have paying customers who order packaging on a monthly basis. Then we also have actually had a pilot with L'Oreal, the big cosmetics company, and now we are working towards a contract to become their supplier. And at the same time, we are also in conversations with many more potential customers, which are also like big corporations, small, medium businesses. So basically, we are like having a quite wide range of potential customers because there are lots of products that are produced and they do need packaging. And actually, at Change Now, we met a lot of potential customers where we met with you as well.
Great.
So I think like it's a huge build up right at the moment.
Yeah, Change Now was an amazing summit, right?
Yep.
One of the things, obviously, that also every startup founder has to contend with is fundraising.
Yes.
And you're smiling.
Yep, you have to fuel your startup with funds, exactly.
What's your experience with that so far? What stage are you at? How much did you raise up until now? And just generally speaking, how did you experience the process of fundraising?
I think last September, we closed our first investment round. We called it pre-seed, but when actually we finished fundraising, we realized that probably it's more a seed round already in terms of the size, because we raised 700,000 euros from investments only, and there were some grants as well. But like normally pre-seed is smaller size, and we actually aimed to raise 500,000, but we got oversubscribed. So when you ask, thank you. So when you ask about my experience, so of course, at the end, it was very positive, and it is very positive that we were able to oversubscribe. We got a great investors in our cap table. And, as everyone is calling it fundraising winter, we didn't experience that as much. But I would say, again, at the end, it all worked out. But of course, it was a long process. And we did some mistakes, or we spent too much time on not relevant investors at first, trying to find that actually target audience for us in terms of investment as well. So it was different, and of course, sometimes it's a bumpy road. But I think if you continue doing and advancing on that, progressing on that, then I think this is the outcome that you receive, that you can close the round and maybe even get oversubscribed. And to be honest with you, we even had to put a point that we are not taking any more investment, because in this round we cannot dilute anymore, because there were more potential investors who were willing to come in and still invest.
All right, now here's the deal. If you want to get real impact investors who are eager to fund you because you are the ideal startup for them, and who can bring you more new clients through their network, and who will give you warm intros to other impact investors, then go to perfectmatchinvestor.com. That's perfectmatchinvestor.com. Enter your email address, click on download, and get my ebook on how to eliminate the noise and find the top 5% of investors that'll supercharge your impact startup. How many investors was it altogether?
Good question. I think altogether for the whole round, up to 7.
And how important would you say is it to find investors that are just really, really good match? You could even say a perfect match for you. How important is that?
I would say it's the most important and probably critical part in this fundraising process, because I always say that it's a two-way road. Investor and founder. That first of all, it has to be a match in terms of even industry that investor invests to and founders are working in our startup is in. Because obviously, if the startup is us in sustainability trying to target AI investor, it will not work out for neither of parties. Of course, even though AI accelerate or AI investor might consider investing because it's a very interesting topic, but still they wouldn't be able to bring expertise, for example, if we are not doing anything related to AI. So I think probably this is the most important job to find this perfect match or perfect, first I would say perfect pipeline of the potential customers. So like I would say that founders shouldn't be targeting investors that are not in their stage, that not are in their industry, not in their region. So like just really emphasize on the group that would be the potential investor specifically into your startup, depending on the needs that you have in your startup.
How long would you say it takes to develop a relationship with an investor to the point where you feel, okay, we understand that we're a good match and also we're ready to start signing some deals here?
Probably you can get a first impression of the investor quite fast, probably even during the first meeting. And you can see whether it's a potential match. Doesn't mean that you go all the way through to the end, but still you can feel. And I always say that founders most likely, or in most cases, they have some kind of a gut feeling. So this intuition, and then they can add to this intuition all the numbers, all the data analysis, collect all the information, collect feedback about the investor. But still, founders most of the times they do have this gut feeling. So I think sometimes it really takes just 10-15 minutes of the first conversation where you can see if it could be a potential match. But then, of course, it is important to make a decision based on the numbers, based on the facts. So again, gut feeling is great, but you have to build something on top of that gut feeling. But to your question, when you can feel the match, it could be quite fast, but then it also could progress. Like if you get to explore what, for example, for us, it was important to what other startups investor already invested. Do they have any portfolio companies that are somehow similar to us or in the similar field, or they could share the similar customers with us, this kind of thing. So of course, it takes investigation as well, and you do your research on the investor to see if this is a match as well.
If you're looking at other startups around you and how they fundraised, would you say that research is something that founders tend to do a lot and very well, or do you think that research is something that founders could do, get better at?
I think really depends, of course, on the founder and the startup. But what I saw, I think they are not doing too much of the research, or I mean, we were the same when we started doing our fundraising process. We were just targeting or talking to any investors that we could get access to. If we got some introduction, even if it's not again, it's not a match, probably we were still talking to those investors. And I wouldn't say that it was bad that we were talking to those investors at the beginning. We still got some experience, get to learn, pitch to those investors, how to negotiate and have this communication, how to follow up with them, and so on. But overall, I would say that, of course, the more time you spend on your research, the less time you have then to outreach to those investors that wouldn't be relevant. I think this is the main point. like you can have a pipeline of 500 investors, but what good does it do for you if it's only 50 of them who are actually relevant to you? And then you end up reaching out to 500, but still it's only 50 who would be interested in your startup, not because you have a bad idea or anything, but just because it's not a match. It doesn't correlate with their investment thesis or the stage that they invest into. And like there are many also lists of those VCs that you could outreach, and you can if you go to LinkedIn, I think I see posts almost every day that I have a list of 500 investors. Yeah, but this is good as a baseline, just to see maybe you can scrap some of the data from there, but to not do this cold emailing to everyone that you can find on those lists.
I totally agree. Lists are maybe a good starting point for some, but the research is super valuable. And what would interest me is because you were talking earlier about, not just researching the sector and the ticket size and things like that, but also researching then the portfolio startups of your investor and deciding, for example, do some of their portfolio companies have similar clients as you do? Could there be synergies? Also be mindful and careful whether there could be competition, right? That's possible as well. Or this is another thing that I've heard from startup founders is if you find no portfolio startup companies at all that are doing something somewhat similar to what you're doing, then, is this the first round for the investor to try out what it's like to be working in this sector, even though they've declared it, but they lack experience, and then that could also be a no-go zone, right?
Exactly.
And how and when did you begin to do that deeper research and realize how valuable that was? How did that happen, and when did that happen?
I would say that we started quite slowly our investment process, because first we had investment from an accelerator. So we were like we had some time to actually kind of get ourselves into the shape and get ready for the investment. And I was like slowly starting to talk to the potential investors, going to some startup conferences, doing the outreach, as I think every founder is doing through those platforms that are available when you go to the events. And like talking to those investors. And again, it was a good conversation. These were good conversations, because sometimes those investors who were not relevant to us, they would do an introduction or they would give some advice. So like I would like to give kind of props to the investors, that they actually most likely they are willing to help, not only by investing, but actually by introducing, by developing the whole industry. So I think still it was like a good starting point for us. But then I think there were a couple of pitch coaches, because like part of the investment on fundraising is pitching. You have to do pitching from the stage in front of the investor. You have to do elevator pitch, like you do so many different types of pitches. And one of the pitch coaches, he was actually not talking to me about the presentation per se or how to answer the questions. He asked me a simple question: do you have a strategy for your fundraising? And then I realized that I do have some kind of understanding or feeling of what should be our fundraising process, but I didn't have, like this thing set in stone that these are the investors that we need to target. These are the stage that they need to invest to, because that's what is our stage. Even geographically, I had to be very conscious that we want to be invested in Europe, because we are not going to US market, for example, at the moment. So of course, it makes sense to get investments from the market. And I think it was like, maybe this was kind of a starting point when I got this question, like so blank. So what's your strategy? And I was like little bit embarrassed, even that I think that I'm a very strategic person, but in this case, I didn't even think through this, or I didn't think through this, really well. So that's when I sat down and thought that, well, we need a strategy. So what are the parts, or what are components of the fundraising strategy? I didn't know how much we need to raise, but like I wanted to set this like really clear. That's how much we want to raise. That's our valuation. These are the investors that we need to target. They have to be in the impact field, because even though we have a great business model, we have this additional price or additional benefits of being sustainable, reducing CO2 emissions, saving water and lands from polystyrene. So of course, that's when I had to lay this out, and then based on that, I could basically the strategy that who are we going to target, then I could outline the steps that we will be taking in order to get to those investors. So I think it was the contribution of many people who I talked to, pitch coaches. We also been through the accelerator. We had managing director there who was also emphasizing that you have to have a strategy. So I think it's all based on that.
So little by little, but with one significant turning point where somebody
Yep.
said, "Hey, do you have a strategy?" And you thought, "Oh,
Yep.
actually, if I look at it critically, not yet." Right?
Yes, exactly. Yes.
And then you started doing a bit more of a deep dive into like, okay, what do I really want to know about this investor? And did more research.
Exactly.
I always find it fascinating because I think, this part that, the portfolio of the startups that, the investors invested in before, that plays actually a big role in understanding them.
Mm-hmm.
Some people even say that, you should be talking to those portfolio companies.
And that's actually what I did as well.
Okay, cool. Did you gain any specific insights where you said like, okay, I really want to work with this investor because of what the portfolio company said about them? Did you have experiences like that?
Definitely, I think there were cases like that. And, I think that founders community is so transparent, and, all the founders were very transparent and very open to my questions. And they always explained very clearly benefits and what is not, or what could be better in this investor. And then it was up to us to, kind of weigh this, if this is this as bad as we think, or will it be bad for us, or is it something that we can just don't pay attention to, those kind of things. So again, founders were very transparent. They explained all of their experience, what was great, what was okay, what was maybe sometimes not best. But of course, when there was only positive feedback from the founders, we clearly were understanding that this is, something that is worth it, and we should go for it. Sometimes some of the things founders didn't even see as negative, probably, but for us, it was something that, well, maybe this is not good for us. We don't want to be in a relationship with such an investor. Maybe it was not as bad, not a huge problem, but for example, of course, we've been through Techstars Accelerator, and they are investors as well.
Mm-hmm.
And we've been through accelerator before, so it was not our first accelerator, and we really had to wait it whether we want to go for another accelerator and an investment from them. So of course I spoke to a couple of Techstars founders, and it was only positive feedback, and all the founders explained that they have a big network. I mean, Techstars have a big network of potential investors. It's a big name, it's a brand, and all of those benefits, of course, were basically beneficial for us. We clearly understood that.
And then you did that?
Yes, we did go for a Techstars Accelerator.
Did you ever hear something from founders that made you go like, maybe this investor's not our cup of tea, maybe this is not a fit? Or, if you had to think for other startup founders who are listening to this podcast, what would you tell them to be careful about? What would raise a red flag in your eyes?
Well, so many red flags potentially.
Okay.
Maybe I will start just with a simple thing. For example, many people in the startup industry are asking us, why don't we go for Y Combinator, the accelerator and investor in US? And we have a clear answer to that. We are not going for US market at the moment. And it doesn't make sense for us to actually even to spend our time applying and going through interviews when we know that we are not going to go for this market at the moment. So even I would say it's not a red flag per se, because there are many startups who are going towards US market, and this would be a great fit for them. But for example, for us, it's not something that we want to spend our time at the moment. So I would say start even with such basic things as geography, as industry, and what experience, what expertise this investor could bring. But if you're talking about impact investment, Of course, there are many, or not many, there are quite a few impact VCs that are popping up or popped up recently. And I would say that, of course, you want to know where the money comes from for those impact VCs, and they are transparently, just telling you that, well, it comes from institutional funds and so on. Then it's again up to you to decide whether you want to go forward, go towards that, because like all of those institutional funds, they do have lifetime, and basically you have to return profits. And what I would say that in impact startups or sustainability in this field, normally it takes longer to build this innovation and to actually become profitable and get to the exit. So, if you're looking into standard life cycle of a startup, when exit is expected, year 9, 10, with sustainability or impact, it could be longer because again, you need time to build innovation. You have to spend money and time on research and development. So of course it will be longer, and you might want to be looking into this timeline of the fund, because some funds also can expect not only in 10 years but in 5 years to exit. So again, this might be not possible for impact funds. That's probably not a red flag, but important to consider. Always ask those questions. Yeah. Then for us, it's also important whether investor already closed their fund. You know what I mean? Like if they already fundraised, because there are many investors who are just willing to start investing into this field. They have some opportunities with maybe grant based, maybe countries are giving, like the government is giving some investment funds, but they actually always have to double this amount of money received from grants or from government with the funds that they raise by themselves. So you want to know whether they already fundraised or they are close, because if they do not fundraise for their fund, they will not be able to invest into you. So it's again not maybe a red flag, but important to know. So I would say for the founders, it is important to ask also questions to the investor, not only investor asking questions to a startup. So you want to know all of these factors before you actually decide to move forward with the investor. And again, this depends on the investor and the founder what they are looking for. And of course, I would say that for us, it would be an important factor is a motivation. Why does investor decides to invest into impact startups? I would say if they are willing to participate in the development, especially because for us it was an early stage. So we understand that actually investors could become a great asset to us with their experience, with their network, with their knowledge. And if they can open some doors and if they can invest in the next round. So really there are many important factors that you want to look into and see this as a match, not only for the investor's perspective, but from the founder's perspective.
Yeah. And I like that also that you said, ask questions, do your own due diligence on the investor, not just them doing their due diligence on you.
Exactly.
You also mentioned you want to understand the motivation, why they're investing, and maybe why they're investing in impact, as well as why they're investing in you specifically. So what are the top 3 reasons that investors chose S.lab?
Yeah, it's a great question. And I think this also shows our main assets at the moment. So again, since it's an early stage, and I heard this previously from investors, not specifically who invested into us, but overall, that team is the most critical actually part on this stage. And then that's what I heard from our investors, that is the reason why they decided to invest into us, because of the team, of the founding team. Then they saw that we are bringing other great experts in their fields. They saw how dedicated we are to actually making sure that this works. And we all know that startup can pivot from initial idea or can have some changes, but it's actually up to the team then to make it successful, whether it pivots or not. So definitely this was one of the reasons why investors invest into us, because of the team. As a founding team, we have a very complementary expertise. I have master degree in biotechnology, but at the same time, I have lots of experience on the business side. I was managing teams, products, projects for more than 15 years in the tech industry, building software products, basically. So, I could take this, all of this experience and then bring it to the startup. And my co-founder, Eugene, he has experience in hardware. So like actually building innovation. So then with this, complementary expertise where I'm on the business side, he's more on technical side. We bring this to the table. So this was definitely one of the key reasons. Then I think, of course, we have a great idea with, replacing foam plastics, of course. And it's not only about idea, it's actually about its potential. I would say that the market is quite big. The packaging market is huge. It's 1 trillion euros per year. So of course, even getting a very tiny slice of that, it's a great potential already. And I think then the main thing here is that we actually are building innovation around that. So we're not only bringing this material, but we know how we are going to scale it. We know how we are going to make it available and affordable. It's one of the main problems in the alternative materials, that you can produce just a little amount of them, but then you cannot actually scale it to globally. But that's what we focused on from day one. And this would be one of the first questions of the investors: how are you going to scale that? But we actually answer this question even before they ask it, because this is our the whole idea, or how we present, is that this is the product, but actually the main asset is the technology and innovation that we built around that, and that's how we are going to scale it. And I think the third factor is actually that we do see this as a business, or we look into the startup as a business. So we're not only making an impact, a great product to use, but we actually are looking into this as a business. And we know our business model. We know how we are going to transition from one business model to the next one that will also again bring us to the other level. And I think this is something that is often lacking from impact startups, or that is lacking in impact startups, that they build impact first, but still with the investment, it has to be business first and money first. So show the money to the investor. So I think those key, if you say, if I could only choose 3, I would say these were the 3 key factors why our investors actually decided to work with us.
So team, scalability, business.
Yes.
Wow. What kinds of contracts did you sign? Like mainly safes, convertible notes, equity agreements, or whatever? And this is the follow-up question. That might be a little bit the tricky one. What were the difficult clauses to negotiate in those contracts? You feel like, ooh, I got to pay attention to this one because this could hurt me, or this could have negative effects on the long-term viability of the startup, or whatever.
Oh, this is again a great question. So first, easier to answer. This round that we raised, it was all based on convertible loans, okay. And there were just a couple of percentages that we had to give as an equity. Just like but overall structure was the convertible loans. Mm-hmm. And I see it beneficial for an early stage, but of course we are going to convert everyone soon before we start the next round. Mm-hmm. So again, this was the easy part to answer. Mm-hmm. But maybe I will add something to that for investors, it's also kind of safer, or they consider it more safe to invest into convertible loans on the early stage. So I wouldn't, I would say I would recommend this as an instrument or tool at the beginning. What were the clauses? Yeah. I will even share this, that we had to turn down one of the term sheets from the potential investors because not all the clauses we couldn't negotiate on some of the clauses with them, and we didn't feel that this would be beneficial in the long term for us. So, for example, this term sheet included so many points that we were obliged to put an how do you call this, legal structure into the company with the board of directors, and basically put a board into the company, and then every investor would be part of that board. And we do know that we are going to do that. but maybe not at this stage, because that would mean that it would slow down all the processes if we had to gather a board every time when we have a decision. And there was a list of those decisions that had to be made based on this voting of the board, and it was basically everything.
Oh God. Okay. Yeah.
Yeah, like a lot of decisions. And of course, again, we do know that this is something that has to be put into startup. This is healthy to have a board, and to make decisions based on the board decision, but not on the early stage. And like, it was clear that we will spend so much time on just kind of paperwork, bureaucracy, and even if at the end every investor or every member of the board would vote as we want, still, it would be so much time to gather everyone, to have a quorum, and then to have like the needed amount of the votes. So like, probably, and again, this can be made in a very nice, friendly way. The way it was outlined in that term sheet, it was not as friendly, even though we tried to negotiate. And there were made some changes, and it was kind of a little bit better. But then at the end, still, we understood that we are far from where we want to be with this structural organization of the company. And like, even there was a point in this term sheet that that investor could actually decide whether decide on appointment of the CEO. So of course, I'm not worried if I get displaced as a CEO, if it is beneficial for the company. Mm-hmm. But of course, we all know those famous examples of CEOs being displaced from the position. So again, it's not that I was worried about specifically myself, but it was kind of our own foot where we were starting this whole negotiation process and our relationships. So that's when we realized probably this is not something that we want to go towards. And I mean, there was many other, I would say, points. For example, this investor wanted to have better rights or better conditions than other investors, which we also realized is not fair to other investors who already came in. And this was like the last investor. So like, I'm kind of talking about this specific example because there were many things in this one term sheet. But of course, there were something like that, not something like that, but there could be some other clauses in other convertible loans or other agreements that we had. But I think this was like probably the toughest one, because others were more, they were lighter in terms of legal aspects and all of the organizational structure. They just had very basic, I would say, requirements and points in the contract. So this was the probably extreme example, and I'm happy that we didn't go for that investment in the end.
That is not an easy decision sometimes as a startup, because you do need the investments. But
yes.
I think it's a very powerful and wise decision where, some founders underestimate the control provisions. Right? That's,
exactly.
There's the financial provisions, and then there's the control provisions, or sometimes also called governance provisions, where, giving away too much control can be just as dangerous, let's say, as giving away too much equity. Right.
Yeah.
Yeah, that's a really powerful decision. You had a clear, what in negotiations we call it your WAP, right? Your walk-away point. Have you heard of that?
No.
You had a very clear walk-away point, right?
Yeah, but I guess we experienced that in our case. Yeah.
Yeah.
And actually, interesting thing that at the end it actually all worked out for the best for us, because one of the investors who was that we agreed on investment, like the previous one, that investor was actually able to raise more for us, and they invested more into us. So at the end, we still got the funds that we needed, but again, on the better terms in terms of this, relationship aspect, I would say, like valuation and the amount was the same for both, but then, this investor didn't had to put so much rules into us and so much regulations.
And let's face it, when people hit you hard with the rules, it basically means there's a lack of trust. Right?
Yeah, exactly.
That's what they're trying to balance out with increasing their level of control.
Yeah.
And I think trust is key at the beginning. It has to be there. Otherwise, you end up with contracts with 55 pages. And that's not good.
Yeah, exactly.
Let's move to something more positive, okay? Let's say, what was the greatest positive surprise that you had working with the investors that you then, that you now sign deals with?
Oh, I think I still get those positive surprises even till this day, even though it's more like we are more on the operational side at the moment. But I would say the level of the support, and probably this also goes back to the fact that we were actually choosing our investors, not like talking to anyone, but we actually were looking and doing research and talking to their portfolio companies that they invested into. And this was an important factor for us, how this investor is going to support us in throughout our journey. So I would say this is the not like, again, we were expecting this to some extent, that they would be supporting us, because of course every investor should be interested in a success of a startup. But still, I get lots of like emails with questions: what help do you need with, messages, what help do you need, or those investors sharing some opportunities that they find, doing some introductions. So it's a very close collaboration, I would say, with every investor that invested into us till this day, basically almost every day. And it's in a good way. It's not that they are trying to bother me or the founding team. They are actually involved, and they are thinking about us when they are doing some research, or they are talking to someone. When they are fundraising for themselves, they actually think of us, and they do introductions with other investors for the next rounds. So I would say, like, this is we are in a great place in terms of collaboration with our investors in terms of this support. So again, it's not kind of a huge surprise, but still surprises me in a good way that almost, well, I wouldn't say on a daily basis, but really often I get some additional opportunities from our investors. I did introductions for our investors. Like I did introduce our business development manager to our investors, and now those investors help to build this business development channel. They help to build the pipeline. They do introductions. So they are like really involved into those processes. And if we ask them about anything, they make sure to do their best to help us. And also they bring something by themselves to the table. Like, we saw this, this, we have this mentor. What are your needs? We are going to find someone who would help you. So like, I think this is the what I like the best from in this cooperation with the investors.
Is there one specific example that stands out as a way where they just gave you really great value?
I mean, there were probably so many examples that it's hard to choose some like specifically. I think it's all about probably introductions and relations. So we had one investor introducing us to USAID. It's like a grant or entity that is giving grants. So basically, it was super easy for us to start this grant process with this entity. We haven't received the grant yet, but it's a process as usually. But it was a very warm intro, and like, we didn't have to do a loan application forms and do this whole process. We just jumped into a call with this grant entity and just laid out them our needs. And this was as easy as that to receive that grant.
Wow.
So like, yeah, I mean, there are many doors that I think investors can open when they are in this industry with startups.
So it can save you a lot of time on having to jump through bureaucratic hoops.
Exactly. Like, I mean, this is one of those things. But I think, like, at the moment, we are focusing a lot on the sales process and actually bringing more potential customers into our pipeline. And I think probably throughout the last months, we had, well, maybe it's 100 interests from our investors, like, and it very warm introductions with the customers. Yes, who like, and these are not, just something that, oh, well, I know this, like, I heard about this company. These were actually introductions where they say, here is the point of contact in this company. This is my friend, or this is the person that I studied at the business school or whatever, you know, like, but I think maybe not 100 specifically, but something really close to that.
Wow, that's a lot, and that's really amazing, and a huge, huge value that your investors
Yeah.
are bringing, right?
Yeah.
Because I know, like many startups and founders, really struggle with that early access to clients, which could also be, you know, one idea that I kind of take from that is uh, maybe that's the extra value of having 7 investors rather than just 1 or 2, right? Could
Yeah, I mean, yes,
be an
definitely.
advantage to that. Yeah.
Yeah. Yeah, of course, like normally I would say that you want to have less investors than
Mhm.
rather than more. But that's when we realized that, well, yeah, our round is quite fractioned, but let's take all the advantage, well, in a good way, out of that we have several people and we have like one syndicate of the business angels. And then of course the syndicate, we talked to like one lead investor there from that syndicate, but at the moment, but also we can talk to any other business angel who put a ticket into us. And then this also like expands our network or access to the network.
Yeah. It's a very powerful thing. Yeah.
For sure.
I want to point towards one issue that, you know, a lot of founders and startups faced in their journey is there's tough times, right? And, you know, it's not all just fun and glory, right? Obviously. And at the same time, I find that if you're working with investors that you've really built some good trust with and you're aligned in your values and, you know, trying to create great impact, then, you know, tough times can also be times of bonding or times of coming together. It can strengthen relationships. I was wondering if you had any of those kinds of experiences with your investors where, you know, you were really in need and they were able to help out, or you were just going through a tough time and they were really supportive.
Maybe I would say that we've been lucky so far to not have that much of a tough times. I would say that maybe we had, so again, since it is all hardware and machinery innovation, it takes more time. And of course, there might be some issues where something is not working as we expected. And basically, we couldn't launch as fast as we wanted to launch the full production line that is automated. And I was transparently sharing this information with the investors that this is where we stand with, that's what we wanted, but we were not able to do this because of this and this reason. And I think, again, they were all very supportive. And even though we had everything kind of figured out on our end, but it was good to hear and know that they are always by our side. And even like when something bad happens, they will support us and be there with us. And of course, you know, like they could, when we had some issues, they were asking if they can give us more money. Do we need more money? Do we need some funds? Do we need any legal support? So like all of those things. So again, I wouldn't say that we had very, very tough times so far. I hope they are not ahead of us. I hope this will be like a smoother journey, but of course, so I think it's just in our case, we've been always transparent with investors or try to be as transparent as possible because, you know, like still you cannot share everything, not because you don't want, because it's just not realistic to share everything what's happening in the company because there are so many things. And I try to give a summary to the investor because I also want to value their time. So I want like to give a monthly summary of what's happening, and you know it's not always enough to explain all the nuances. I think being transparent like leads to the great support of the investors, and when they clearly see in these updates that I sent, I clearly state what our needs are. If we are asking them for something, it could be even as simple as we wanted to implement the ERP system for manufacturing processes, you know, to track everything. And I asked, like, do you have anyone who has experience in with ERP systems? that could walk us through, and maybe we have done some research, but we would like to have some real examples or experience from people who already use that. So like those simple things I could ask about, this knowledge or expertise from the investors when we need that.
Do you feel that it actually builds trust to have kind of gone through that together and say, okay, we managed that, we were transparent, our investors were supportive, it builds trust on both sides?
Yeah, definitely. First of all, I wouldn't want to withhold anything from the investors, because it's important for them to know, and we also try to set, I would say, some milestones with the investors, or like stating our milestones to every investor. That this is the milestone when we're going to launch. This is the milestone when we are going to reach a certain level of revenue. This is when we are going to expand the team. So we want to set those milestones with some timelines, not just to set and achieve it someday in the future, but this is the specific date when we want to get there. And we do appreciate that actually investors are taking are paying attention to that, and they keep asking, not in a bad way, not in a bad way. Again, they always emphasize this: how can we help you with reaching your goals? Because we set our goals, and they try to be this bridge that would help us to get to those goals. So definitely it builds trust when you share those, again, maybe issues, maybe bumps, maybe glitches, depends. And also when you share success as well.
Yeah, of course.
But I mean, I think every investor understands that it is a journey, and it can have ups and downs, and it cannot be only ups. Then it kind of feels that something is wrong when the founder are only sharing that the ups. And normally you do expect growing and increasing on all indicators or KPIs, but then still you would experience something that is not working out. So definitely 100% recommend to share, not every small detail that happens, but those things. Also, when you explain that something kind of this bump happened, and how you were able to resolve that, or what's your view on that, how you are going to resolve that, how you are going to tackle that, this also builds this not only trust, but the investor understands you as a team better, and they see your approach to that. Well, and then when they see your approach, it builds a trust. And in our case, I see that when we explain our approach and how we are going to tackle some items, our investors might have a different perspective on that, but I saw that they always respect our decision, and they might, just give some advice, but they will never pressure or push us to do the way that they see the final solution. So they will always give us this freedom to decide what we want to do and how we want to tackle those items. But again, sometimes if you want to listen to someone's advice and to have just a person who you can think with, this also could be a great, place to, and a great person, your investor, to discuss this with.
So sparring partners.
Yeah, exactly. Yeah.
Last question. If you could give fellow impact founders one piece of advice about fundraising, what would it be?
Oh, wow. One piece of advice. There are so many things that I want to say, but maybe if I would choose only one, I would say never give up. Just continue working towards your goals. And this includes so many things, actually. If you cannot find investor at the beginning, it doesn't mean that you will not be able to find investor at the end of your journey. And I would say always be confident in yourself, in your team, in the product. If you don't have that confidence, then you have to do something about that. Meaning that if you're not confident in your product or in your team, then this is a place for improvement, actually. And then again, it's not one piece. I already said a couple of things. I would say keep advancing all the time, keep performing, and everyone says that fundraising will take your full attention, and it is a full-time job to do the fundraising and to raise funds. But at the same time, you have to find that balance while fundraising, but also performing. And because as you fundraise, it will be a long process. You cannot just pause the whole company and to wait for you to raise funds. You can actually find some alternative sources of funds. Like you can launch paid pilots with the customers. Maybe you will find some potential customers who are already ready to, pay you in advance, or maybe you will find some grants. So like just keep advancing all the time, keep progressing, keep performing, and have fun with the fundraising process. Don't forget. This is, I had so many opportunities and great meetings. I spoke to so many people while doing this fundraising process, and really the best experience in my life. Difficult, tough, sleepless nights sometimes, but totally worth it.
And a very social aspect there too, right? Because you're talking about great conversations, meeting people.
Yeah, definitely. You get to know so many people and exchange those ideas, understand investors, other founders better, potential stakeholders. And it's not only about investors, it's actually also about finding partners, potential customers. So it's always a journey for a founder to actually promote what you're doing, raise awareness, be visible. So I think, again, this helps to have a great network around you.
Julia, thank you so much for this interview. I feel like we've gone into a lot of topics to quite some depth.
Yeah.
And I'm sure this is a huge value to founders who, have yet to tackle fundraising. So thanks a lot.
Thank you, Ben.
And I wish you all the success. When's your next round coming up?
We are going to open in first quarter 2025. So we still have, I would say, almost a year before we start fundraising.
Yeah.
Which is good, I would say. Yeah, but fundraising is always on. That's what I say. This game is always on. You always want to be in front of the potential investors for the next round, start conversations early, build the pipeline and update those potential investors every month or every 3 months, depending on what's happening in a startup. So it never stops.
When you say things like that, I feel like I've got a million more questions for you. Maybe we're going to have another interview.
Would be happy to do that. I hope that some founders would find some benefits in listening to this and some tips how to actually tackle the fundraising.
You bring so much value by sharing what you know and things like that. And I also do want to congratulate you one more time for winning the IC Women's Prize in Leadership. And I feel like today's conversation also shows us a little bit of why you won that prize. So thank you so much for that.
That's so nice of you. Thank you very much.
Thanks for listening, and don't forget to subscribe and hit the bell button so you don't miss an episode. And please do share this podcast with any impact founders you know who might benefit from better understanding the investor mindset and from thinking about what that really means. Impact. Let's start this discussion between startup founders and investors about impact in the spaces of circularity, sustainability, and regeneration. Thank you.